Knowing how the Fed are and the election cycle and where we are, I think the propensity for the government or the Federal Reserve to accept a rise in unemployment that's larger than, enough to get them go back to cowbell, I think is unacceptable to them. It's unacceptable. Society can't take this kind of shit right now, and I think they know it. So I don't think that those passive flows disappear. I do think unemployment picks up. I've got some indicators that say it picks up a lot, but my guess is this recession is actually faster than people expect. So it'll be over with. Yes, we'll have a drag. Yes, unemployment goes up and things settle down a bit. The equity market, I mean, I went through this in excruciating detail in GMI, and I went back and looked at everything I could possibly find, and this is the most negative sentiment in the history of markets. Pretty much, right? And so the argument is, from every single person, is yes, but earnings. So let's question that narrative. Could they be right? Of course they could be right. There's no certainties, and none of us believe that we know the truth. But if I look at the year-on-year rate of change of the S&P or the Nasdaq, they're pretty consistent with the S&P's got the ISM at 42, and the Nasdaq has it about 36, 37. Right, so they're pretty much priced in the kind of recession that I'm looking for, which is more like a 1990 style recession than 2008. I think 1990 is actually a pretty good idea of what we're heading into. So if price includes all of the data, the forward-looking data, it's suggesting that the earnings are already priced in. We know that earnings have come down. So what is there that we don't know?
We are currently witnessing a period of stasis in the Bitcoin market. The Bitcoin price needs to start moving again after 2 months of consolidation. The overall economic scenario doesn't look bright at all, and Bitcoin is correlated to events in the real world, but investors can still recognize the digital gold, safe haven role of the most popular cryptocurrency. A strong Bitcoin price breakout is expected, with new volatility incoming. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul speaks about trends happening in cryptocurrency market, including Bitcoin and Ethereum, the accelerated rate of crypto adoption, and the situation of global economy, including bonds, equities, and stocks market.
But when you overlay crypto, I mean, Bitcoin did 100%, and Ethereum, I don't know, did 300%. Now, go back to the conversation we had about when you've got an exponential trend of adoption, which is crypto, and the business cycle and liquidity cycle has taken the assets down to the bottom of the trend, your future expected return from this is bananas. So the future expected return, I think, out of Ethereum here is by far and away superior to anything else, that nothing will come close. So there is a world where you could construct a portfolio of long bonds, long crypto, but they're actually the same bet right now. That's the issue here. So you might as well take the long crypto. You can just size it differently. If you want to take a different bet, which I think would play into the discussion we had, Alf, is maybe you want to buy something to do with energy or copper. Copper's probably a good one, right? Because copper is discounted by the business cycle, unlike oil, which is not as discounted. We know there's a shortage to create EV. We know that Europe's going to massively force and accelerate this process. So in which case, copper is an issue at some point in the next business cycle, not now. So maybe you can have a barbell, which would be long copper, or long a copper, one of the big copper miners, that kind of stuff, like Rio's or whoever, and long Ethereum.
The economy is still recovering from the COVID-19 outbreak as new problems arise. We are now in a time of rampant inflation, with central banks trying to remedy that by raising interest rates. The U.S. CPI data, or Consumer Price Index, released on October 13th, came in higher than expected, 8.2% year over year, negatively impacting the Bitcoin price. But inflation is not the only issue. The global economy is also struggling with the energy crisis, affecting Europe more than the U.S., due to its strong dependency on Russian natural gas and raw material.
So I think the simplest macro trade, and I've been wrong on this, so I've been in it. I think you both had a stab at it as well, which is the bond market. So when I look at the year-on-year rate of change of yields versus the ISM, that relationship has held up for the last 50, 60 years. And occasionally it decouples a bit. Early 2008, end of 2007, 1990 were the two. 1990 was very similar. Again, we had a 6 and a bit % inflation, bond yields decoupled. 1994, we had a bit of that too. So this is the most decoupled it's been from the business cycle in history, regardless of what inflation is, because the business cycle should have some of that. So when I look at inflation expectations, they're relatively benign. If I'm looking at 5-year break-evens, they're at 267 and 1-year break-evens at 281. So they're relatively benign. But the bond yield is at 4%. Now, if I look at the year-on-year fair rate of comparison versus the ISM, it's currently pricing the ISM at 73. And it should be down at where the ISM is now, about 50. And that would mean bond yield should be at 1.5%. Now, doesn't mean I expect it to go to 1.5%, but that's the magnitude. So I think that's very interesting. And I think this is the illiquidity in the bond market that has been caused by the Basel III regulations, the hoarding in reverse repo, and a bunch of other issues. Because it's not in inflation expectations. So I think that if we're going to see the rate of change come, plus the decline in growth, plus the decline in inflation, then bond yield should be a relatively good trade. Now, can you get it to something really interesting? Well, it starts to become interesting. Something that you mentioned, Alf, is terminal rate expectations are about 5%. The Fed are probably going to make it clear they're probably not going to go much above that. Probably make it clear today. You can buy Fed funds pretty much at the terminal rate. So you kind of get this call option, which is interesting because calls are too expensive in fixed income land right now. They're crazy expensive because as liquidity's blown apart, volatility's gone up. They're both a function of each other, and they're both actually highly correlated to the reverse repo. Really fascinating charts that they're all a function of each other. So I kind of like Fed funds or Eurodollars if you want to do it, because the curve will eventually steepen, and that will be the front end coming down. So that's the traditionalist approach.
Bitcoin has shown not to be immune from this global turmoil. Although the price at its early stage was independent of traditional finance, correlation began to show in 2016. The idea of Bitcoin as a digital gold became popular because both shared a scarcity and difficulty of extraction, being mining, as well as fulfilled the role of being a store of value. Since many view Bitcoin as a risk asset, its correlation with the S&P 500 and Nasdaq 100 became visible, no different than traditional stocks. So, do you think crypto markets will go lower or higher from here onwards? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.